Hello everyone, and welcome back to Success Zone. The economic crash has worried a lot of people, but some individual investors see it as an opportunity to purchase discounted stocks. Many of these companies will likely bounce back, but for now, their stocks are at an all-time low. This may mean investing in them now will likely lead to huge profits in the future once the world has returned to normal. Let's dive into the 15 stocks you must buy during the pandemic. Make sure you stay until number 1, as you don't want to miss the surprising stock that is a must-buy during this pandemic. Number 15, Apple. Apple has become more popular than ever. The pricey cell phones and computers have become standard in many homes. Much like other companies during this pandemic though, Apple has been hit hard. They had to shut down factories and can't release any new products during this time. Productions have halted, and new iPhones and other devices also cannot be upgraded. This has led to a plummet in Apple stock. The current Apple share is at $315 as of May 11, 2020. While not as big of a discount as it was before, locking it in at this price is still a great investment. Number 14, Infi Corporation. Infi is the top dog in high-speed data movement, interconnects focusing on analog, DSP, optics, and packaging. Infi also serves telecoms, cloud, and wider markets. All markets have experienced massive data and traffic growth, and these trends are predicted to continue. Analysts are forecasting sales growth in 2020 of over 50%, with a further 20% estimated for 2021. This works through to EPS forecasts of $2.21 for 2020 and $3.36 for 2021. Infi stock is trading at around $112 as of May of 2020. Between profits growth and valuation expansion, there is good indication for the stock to appreciate by 50% to around $150 within the next 12 months. Number 13, Zoom Video Communications. Zoom Video Communications is a company that you may have heard of by now. It is a software that allows users to hold meetings, classes, or just video calls remotely from home. It is user-friendly and easier to set up and use than most alternatives. It also allows users to share screens, write on a virtual whiteboard, and hold video calls with large numbers of people. In the past few months, Zoom's stock, ZM, has increased from $67 to $150 per share. This increase seems to be only going up, so it is best to purchase these stocks while the usage of Zoom is on the rise. It doesn't look like it will crash anytime soon. Number 12, Akamai Technologies. Akamai operates a global, resilient, and secure platform consisting of 250,000 servers, called Akamai Intelligent Edge Platform, which interacts with 1.3 billion devices and 100 million IP addresses daily. Akamai has been a pretty reliable growth company over the years. Growth in earnings per share has been impressive, at 125% from 2017 to 2019. Analysts are currently estimating sales growth for Akamai of about 7% for both 2020 and 2021, with EPS coming in at $4.88 and $5.33. Based on today's share price of $103, that's a next year PE of 19. For a top company with pristine balance sheets, excellent management, and many years above the trend growth ahead, the shares are relatively cheap. I expect that analysts will revise upwards their EPS estimates in the coming months. With that help, I'd expect Akamai shares to appreciate by 30 to 40% over the next 12 months. Number 11, Lumentum Holdings. Lumentum is a market-leading designer and manufacturer of innovative optical photonic products, enabling optical networking and laser applications worldwide. There is no doubt that we will witness major growth in data volumes over the coming years from cloud, 5G, video, and media, e-commerce, social, and artificial intelligence sectors. Not even Goldman Sachs could dispute this. Given the already cheap price of Lumentum stock, I believe the odds are stacked very firmly in favor of investors who buy at the current $78 level. I would anticipate gains over the next 12 months of 50% at a minimum. Number 10, Beyond Meat. To capture some of the huge meat market opportunity, Beyond Meat developed 3 core plant-based product platforms that align with the target meat categories globally: beef, pork, and poultry. Investors should bear these points in mind. People must eat, and Beyond Meat continues to supply grocery stores and other vendors. Restaurants that are supplied by Beyond Meat will reopen post-pandemic, and Beyond Meat has hardly scratched the surface of international markets. Logically, one has to conclude that Beyond Meat will continue to grow its business for many years. Investors who now buy shares in Beyond Meat, a previously expensively valued supergrowth company, will enjoy outstanding gains in the future. Further, because Beyond's product offerings are being received very well in the market, and given the enormity of the potential market, Beyond's share price has potential to continue to appreciate over many years to come. Number 9. Square. Square started in 2009 to allow micro businesses to accept customers paying by credit and debit card. Since then, it has expanded its services from simple handheld card processing software into a suite of 30 different innovative solutions to help sellers manage and grow their business. Square has proven itself to be an excellently managed company. This, plus consistent growth, has led to the shares being perennially expensive. With the shares now discounted, investors have an opportunity to buy shares at a more reasonable price. In early 2020, Square shares peaked at $87. Assuming 2020 is largely a write-off, Square should be fully back into profits and reliable growth in 2021. Number 8. Nokia. Tech news and pundits state that companies are now scrambling to leadership in the race to innovate up from 4G connection to 5G wireless connection. This is a revolutionary step up for phone companies, but it is coming at quite an uncertain time. Nokia's stock went down from $6.42 to only $3.48. This is the perfect time to invest in Nokia, even if it seems to be a bit of a riskier move. Their stock is lowered to an affordable price, and the company will likely bounce back once we get back to striving to go 5G worldwide. Number 7. Hilton. It's no surprise that travel has pretty much come to a stop during this pandemic. Nobody is willing to risk it traveling for business or pleasure, and that means the travel industry is struggling especially hard. Hotels have been one of the hardest hit areas. The Hilton stock is only at $75. Once the worst is over, travel will get back to its normal functions, and Hilton stock is predicted by many experts to rise dramatically once again. Number 6. Teladoc Health Inc. Teladoc is an increasingly popular software that is needed now more than ever. It is a way to receive healthcare remotely from home, and it has been dubbed telemedicine. This type of software has become a new trend, and Teladoc Health is leading the pack. The stock price for Teladoc has gone from $48 to an amazing $173 within the past year. This would be a great stock to invest in now. It is also recommended to hold onto the stock for a couple of years, since this company doesn't seem to be slowing down for a while. Number 5. Microsoft. Microsoft is a huge company that many people know about. This usually means that their stocks are astronomically high. But due to the current pandemic, Microsoft has had to order their employees to work from home. This has slowed their production down. This is a great stock to invest in because of the pandemic crisis, and since the stock price has dropped, many predict that the company will bounce back for sure as a leader and innovator in its field. This will mean that when everything goes back to business as usual, investors will be able to take advantage of the rise in price of the stock and potentially make a huge profit. Another reason to invest in the stock now is that stay-at-home employees will be relying on an innovative software product called Microsoft Teams, which will further help increase the profit of stock investments. Number 4. Atlassian. Atlassian, ticker symbol TEAM, is a tech company based in Australia. Tech companies have seen a spike in popularity as technology continues to get more and more advanced. Now, during the pandemic, technology is needed more than ever. We need the internet for our smartphones, our computers, and other pieces of technology to go to work, go to classes, and communicate. It is the central hub of nearly all of our basic needs right now. Atlassian is currently trading at around $176 per share as of May 11th, 2020. It is now on a great uptrend and seems to be continuing to increase. This is a great company to invest in because as soon as work life returns to normal, we may well see a big jump in the stock price with a large profit to be made. Number 3. Carnival Corp Cruises. This current pandemic has worried many people. Travel is now a scary and seemingly risky endeavor, and leisure needs are being seriously rethought. At the start of this pandemic, cruise ships helped to spread the virus, so it is no surprise that nobody wants to hop on a Carnival cruise anytime soon. In just a week, Carnival's CCL took fall drastically from $57 to only $12. This means that the company's stocks have become more affordable than ever before, and many believe the bottom has been reached. Number 2. Slack Technologies. Slack Technologies is a company that allows employees to collaborate online. It is a new alternative to emails. It is fast and highly efficient, especially since this pandemic is calling for many employees to work from home, often as a team, but with no physical offices to hold meetings and discussions in. Slack has become a popular collaboration software. It runs parallel to the likes of Microsoft Teams software. Slack's work stock price has plummeted to only $28 per share. This is because while it is an important tool during the pandemic, the company itself has suffered along with most other companies. But Slack Technologies is a company with long-term potential. Many analysts believe this company has the potential to be highly successful for at least the next 3 to 5 years. This is a stock to invest in and hold for at least 3 years with future profits, keep in mind. Number 1. PayPal. While physical shops are suffering, e-commerce is booming. Online shops are experiencing a rise in sales due to the fact stay-at-home and quarantine orders are in effect. Cashless and online payments are in no way new, but they are getting more and more popular as the years go by. In a typical online transaction, there are usually several methods of payment. One is the traditional way of entering your bank card details, and this can become tedious over time, especially now that we are increasingly and constantly shopping and paying for things online. PayPal has a safe and easy solution to this. PayPal is an online wallet that allows you to give and receive payments. Online sellers usually prefer PayPal for its ease and reliability. This makes the company a great stock to invest in. Make sure to click on one of these videos on your screen, and we'll see you there.